All right, let's talk about it. After a truly brutal shakeout that wiped billions off the board, the crypto market is roaring back to life. But the big question is this the real deal, a sustainable recovery? Or is this just a bull trap waiting to spring on investors? We're about to decode all the signals and find out. And that is the question on everyone's mind, right? Is this legit? Today, we're going to break down all the powerful forces at play to give you a much, much clearer picture of what's really going on. So, to really get why the recovery is so impressive, you first have to understand the sheer scale of the crash. We are talking about a $19 billion liquidation event. I mean, that's just a massive wave that wiped out countless traders who are over-leveraged. A huge reset. And yet, look at this. Even after a colossal shock like that, the global crypto market cap has already clawed its way back to a staggering $3.92 trillion. You know, the speed of that bounce back, it really speaks volumes about the underlying strength in this market. And of course, Bitcoin is leading the charge, trading firmly around that $112,000 mark. Now, this isn't just some random price pump. There are some really powerful, fundamental currents moving just beneath the surface. And that's exactly what we're going to dive into today. So what in the world turned this potential disaster into a massive buying opportunity? In this first section, we're going to dig right into the core factors that are driving this incredibly powerful market shift. Look, this recovery is not being driven by retail FOMO, not this time. It is the direct result of two huge, high-level forces colliding. We're talking major shifts in the macroeconomic landscape and a huge, decisive flood of institutional money. So let's break down those two pillars holding this market up. We're going to start with the critical signals coming out of the U.S. Federal Reserve and then take a look at exactly how Wall Street is playing their hand. This rally is really being fueled by a potent 1-2 punch. First, you've got the Fed signaling a big shift towards an easier, more pro-growth monetary policy. That makes riskier assets, like crypto, way more attractive. And second, you have the big players on Wall Street seizing the moment, using that dip to buy in at a discount. Let's zoom in on these Fed signals for a sec. We've heard dovish language from Chair Powell, which is basically code for, we're going to make money easier to get. Then you have Fed Governor Bowman coming out and saying she expects 2 more rate cuts this year. You add that to a weakening job market, and it all points to the potential end of something called quantitative tightening, which is basically the Fed pulling money out of the system. For an asset like Bitcoin, the end of QT is incredibly bullish news. And here is Wall Street's response in cold, hard cash. In just the last 24 hours, U.S. spot Bitcoin and Ether ETFs saw net inflows of almost $339 million. This isn't just wishful thinking, this is institutional conviction. They didn't see a crisis, they saw a sale. This quote from the CIO of Bitwise, one of the major ETF providers, just captures the big money thinking perfectly. They're looking at that $19 billion washout and calling it a blip, a minor speed bump in a much larger uptrend. They aren't panicking, they are buying. Okay, so we know the big money is pouring in, but the really interesting question is, where is it going exactly? Now we're going to follow the money trail, see how capital is rotating inside the crypto market itself to understand which stories and trends are getting the most traction. When we look at the market leaders, there are two fascinating things happening. Research from Fidelity suggests Bitcoin could be entering an acceleration phase. Think higher volatility, bigger upward moves, all anchored by those strong ETF inflows. But what's really interesting is that Ethereum is actually outperforming Bitcoin in percentage gains right now, and that's being fueled by a ton of excitement around stablecoins and its huge upcoming Pectra upgrade. But the money isn't just stopping at the big two. Not at all. We are seeing a ton of interest in altcoins. Specifically, the capital is flowing into altcoins that have a really strong, clear story behind them. Things like artificial intelligence, business services, and even a surprising comeback for privacy-focused coins. And the gains in some of these altcoin areas have been absolutely explosive. I mean, just take a look at Chain Opera AI. It skyrocketed nearly 130% in just one day. Even a more established coin like Zcash saw solid double-digit growth. This tells you investors are actively hunting for these specific narratives to back. Now, this right here is a crucial piece of the puzzle. Despite all the surging prices and the big institutional buys, the fear and greed index is sitting at 34, which is firmly in fear territory. This creates this incredible divide. You have big money confidently buying, while the average retail investor is still on the sidelines, feeling skeptical. That gap suggests this rally could still have a whole lot of room to run if that retail sentiment ever catches up. So, while the short-term vibe is definitely fearful, if you zoom out, the long-term foundation for crypto is arguably getting stronger than it's ever been. Beyond the daily price swings, we're seeing major trends in regulation and corporate adoption that are building a much more solid base for this entire market cycle. Yeah, the regulatory picture is finally starting to clear up. We've got the Genius Act, which wants to create a solid rulebook for stablecoins. And in a massive change of tune, the new SEC Chair Paul has actually called creating clear rules a top priority. You combine that with the fact that now over 75 public companies hold Bitcoin on their balance sheets, it just shows crypto is really solidifying its spot as a legitimate asset class. Okay, so let's put it all together. How should we be thinking about what comes next? In this last section, we're going to give you a simple playbook with the key things you need to be watching and the events coming up that you should have on your radar. Here are 3 key signals to keep your eyes on. First, watch that fear and greed index. If it moves back into that 50 to 55 neutral zone, that's a huge sign that retail is getting its confidence back. Second, make sure those ETF inflows stay consistently positive. That's your proof of institutional support. And third, watch Bitcoin dominance. Basically, it's market share. If that number starts to drop, it could be the starting gun for a major altcoin rally. And you're going to want to circle October 16th on your calendar. BNY Mellon, a global banking giant, releases their earnings. Any comments from them on their digital asset strategy will be a massive tell for institutional sentiment. We'll also be listening for more Fed chatter and any updates on that Genius Act. And just a final piece of advice here. As the market potentially enters this acceleration phase, volatility is probably going to increase a lot. This is not the time to be a hero with high leverage. Smart, careful risk management is absolutely essential to navigate whatever comes next. So there you have it. It really feels like a potential perfect storm of good news. You have a supportive Fed, a flood of institutional cash, and a clearer regulatory path forward. The question is, are these forces strong enough to kick off a brand new, sustainable bull market? Let me know what you think in the comments below, and we'll see you in the next explainer.